You drag and drop the robot into the charts. No need to do any settings, just click OK. Now, by doing this, the robot is in the charts. And to verify this, you can see that the robot is scalping for auto exit. Now, you guys can take a note together with me, okay? So when you are doing robot trading, right, the first step is to know the direction. Now, direction is what? Direction is, we call this as, for some of you guys, there will be people that are using fundamental analysis. Now, for fundamental analysis, it's basically studying about the world economies. For example, GDP, inflation rate, ISM, CPI, PPI, and then one of the most famous indication for interest rate is, for fundamental, it's going to be interest rate. Now, for interest rate, the reason why we're studying this is because let's say that you're studying on currency. You want to know that if interest rate increases, the currency increase or not. Okay, that is a question mark. That is why you study fundamental. But the problem with fundamental analysis is that it's so difficult to understand, right? When you want to study fundamental, you have to read the news, read here, read there, economy here and there, read everything until you don't know what you are reading also. That's why people decide to come up with technical analysis. Now, technical analysis is whereby you start to learn about, there's a monthly chart, weekly chart, daily chart, 4 hour, all the way down to minute chart, 30 minutes, and down to 1 minute time frame. And at this stage, you will start to study about the chart pattern itself, right? And from this chart pattern, you hope to identify that if the market will be upside, downside, everything. But come to this problem. When you study technical analysis on multiple time frame, you also face one problem. Correct me if I'm wrong. But the biggest problem that you face is you don't know which time frame to use. Correct or not? People tell that, you have to study every single time frame from top to bottom, but in the end, you will scratch your head. So what time frame to look at? You also don't know. So that's why on our site, we nail down even further to next step, which we call it as seasonal. Now, seasonal is a mathematic way that we will diverge to understand that what is the right time it will goes up, what is the right time that it will comes down. Okay, based on historical movement, we roughly can know that the history repeats by itself. We all know the exact what date, what months, what weeks, and until what hours it will goes up and comes down. Based on seasonal, right, we can immediately know that, hey, the next big pictures of market direction is likely to be potentially to be uptrend. So we can focus to be buy side more. Okay, but that's not seasonal. So you know the big direction already. Okay, you know the big direction is to focus to, let's say that focus to buy. Then only you reach to the next level, which is the indicator level. At indicator level, you got two ways of doing this. Number one way is mean reversal, which is what we had learned yesterday. RSI is an example. 70, 30. Buy low, sell high, right? And market move in this way. Mean reversal. Trend following is whereby you're using indicator like moving average. When it has crossed up, you make a buy. When it has crossed down, you make a sell trade. And by doing these actions, these two have a slightly different way of executing it. Buy from moving average is that you're expecting that it will go continue higher. Sell from here is that you're expecting it will go continue lower. Now, regardless of any of this, okay, we have been mentioned that if you want to focus to buy, then you buy only. RSI, buy at 30. Or moving average, you only buy at crossing up. So this is, you have nailed down the focus on this area. And yesterday, what we found is that based on market changes, we have to shift the indicator as well. We have to slightly adjust the indicator, and that is an option of optimizations. At this stage, this is what we call this as optimization to find the best settings. Find out that current market is what type of moving average is suitable, what type of RSI is suitable, what type of RSI or moving average value that is suitable. and then you backtest it. Backtest means that you go back to history, you see that if the market is profitable or not. Then it's whereby you use the robot to verify. Okay, and yesterday in the trading simulation, right, the things that you guys have been done is actually a manual way to know, hey, this strategy works or doesn't work in the back testing. Okay, back to history and test it. And if every process has been done completely right, you know how to entry, how to exit already, then basically the last step is to enter the market to execute for the trade. So let's summarize everything. How to do trading is that, first of all, for our side, we will tell you that, okay, so today is going to be Tuesday. On Tuesday, it's good to buy or sell. You look at the calendar. And based on this calendar, later from here, you'll find indicator that's suitable to trade here or here. And based on this indicator, you finally adjust a little bit on your settings. Okay, on your setting, you adjust already, all good. Drag and drop the robot in, make a first buy. Then, done. Your job done.